Please open the gate for me. Let's start the vlog. Hello guys, welcome to the vlog once again. Today's content will be a little different. I am going to talk about stock market and how people can benefit from it. Meanwhile, enjoy the beautiful view of our place. Nowadays, everywhere there is a lot of hype about investing and trading in the stock market. An influencer has played an important role in making people aware about the stock market trading. Today, I will try to simplify the stock market. Every country has a financial system. Financial system means a system which helps to transfer the funds from one place to another place. Financial system is of two types. One is capital market and another is money market. Capital market is again divided into two types, equity market and debt market. Mostly people nowadays are talking about this equity market. In India, National Stock Exchange and Bombay Stock Exchange are the most important equity market. Mostly all traders and investors trade and invest from National Stock Exchange and Bombay Stock Exchange. Now coming to the point, the most important point people need to understand before investing or trading is at least they need to know what financial system is. You can simple type on the Google and you will get multiple explanations. After that, you need to understand what investing means. Normally, it is better to learn fundamental analysis. This is the core way of analysis used by many top investors. You can simply type fundamental analysis and spend some time in learning and reading about fundamental analysis. The best book you can start with is The Intelligent Investor or Security Analysis, written by Benjamin Graham and David Dodd. After that, you can read the books written by Peter Lynch. This is how anybody needs to start their journey in the stock market. Mostly people watch few YouTube videos and jump into the conclusion that they will become a trader and earn a lot of money. This is not true and not possible. Investing is like any other profession. Before starting investing journey, a lot of preparation is required. If you cannot study and give time, it is better to start the investing journey indirectly through mutual fund. After that, once you think you have a good theoretical base on equity market, you need to open a demat account. This is simply like a bank account. Through this, you can buy the equity share and keep it. Many stockbrokers are there to give you a service. Recently, Upstocks is giving free demat accounts. The charge is also minimal. If you want to open the demat account, I have shared a link in the description box. You simply need to click on the link and start the process. It is totally free of cost right now. Once you own a first demat account, you need to start closely observing the shares and apply fundamental analysis to check if any stocks are worth buying. If you want a video on how to use fundamental analysis to select a stock, you can write a comment. I have also written a book on fundamental analysis on how to use the accounting information to analyze the stocks. If you want to order, I have given a link. Investing in an equity market is a trial and error process. Initially, you will use your knowledge and start selecting the stocks. Some will work and some will not work. After that, you will analyze which investment worked and which did not work. It is a time-consuming process, and over a period of time, gradually you will develop your own style of investing. All top investors have started the same, and the journey is same for all. Regarding the capital you want to invest, it is always advisable that you start with small capital, and gradually you can increase the stake. There are many techniques people follow. Some of the most simple technique is always try to choose the most profitable companies with a good growth rate. It is very simple. Either you can download the annual report from the company's website or from National Stock Exchange or Bombay Stock Exchange and see the income and expense statement. There you can see how much the net profit company is having. The more profitable companies, the share price of that company will increase more. This is a very simple funda. After that, the price you are paying for the stock matters. Wait for the moment when the stock market falls. That is the best time to buy such profitable companies, and after, just wait. The type of companies you can choose are categorized as large cap, medium cap, small cap, and penny stocks. It is always better to invest in large cap or mid cap, which is very profitable, and in future, also there should be the scope of that company. If you are new, it is better to stay away from small cap and penny stocks. But after years of experience, you can try out even small and penny stocks. If you are confused what large cap, medium cap, small cap, and penny stocks are, It is better you Google it out and give some time to understand it. In simple language, large cap means large companies which have very high capital, are profitable, and have lots of liquidity. Liquidity means a lot of buyers and sellers are available in the market. If you want to buy it, you will easily find the seller, and if you want to sell, you will easily find the buyer. In short, these companies are the market leaders. In National Stock Exchange, you can check the Nifty 50 stocks, and in Bombay Stock Exchange, you can find the companies listed on Sensex. Likewise, mid-cap are the companies who have medium-sized capital and are not so big as large cap. Small cap are very small and in most cases have just come in the market. Many of them many or may not be big enough. So that is why a real skill is required to analyze these stocks. But this small cap gives a very good return if you are right. These are high investment risk investments. Another very important point in investment is diversification. This means you need to investment in more than one companies, but they should be a different company and should be from different industries. Like one company you can choose from pharma, one from IT, one from FMCG, one from banks, one from auto, etc. Many of the times people buy hundreds of different companies. This is also not a very good idea. It is better to keep at the most 10 to 15 companies, because this will give enough time for the investor to manage the portfolio. Portfolio means a group of different stocks. Creating a portfolio will help to eliminate the risk. When talking about risk, there are two types of risk. One is related to market, one is related to company. When we create portfolio, only company-related risks are reduced, but the market-related risks remains. This market-specific risk means a war, risk OG, high inflation, low GDP, high interest rates, or the most famous coronavirus outburst. This type of risk always remain even if we try to reduce the risk. That is why investing in a market is always subject to risk. Many experts have come up with the solution to this problem. They normally trade in derivative markets also to reduce the market-specific risks. This concept is known as hedging. We buy stocks and want the share price to increase, but if the market falls, the company's share price also falls. That is why, at the same time, investors trade in the derivative markets for a short period of time. There are ways in trading by which the investors can earn profit even when the market is falling. By this, they can cover up some losses in the short term. In the long term, if you see the data, stock market have always increased. The experienced investors understands this, so they play this game of investing and trading simultaneously. And when I listen to the first-time traders who have come to the market just to trade, they have not realized that they are trading against the big investors and institutions. That is why the journey of trading should start only after a lot of experience and a lot of hard work and studies. Now coming to trading, it is better to learn the technical analysis. Technical analysis is the technique to understand the price movement with the help of the charts. There are many ways which the trader can learn. Initially, the trader need to understand what is technical analysis, and after that see what works for them. I feel the most easy and effective technique is price action technique in technical analysis. You can Google it out what price action means. Again, trading is way different area, and a lot many things are there. One is the knowledge of technical analysis. Another is understanding the concept of psychology, because this is a very short-term trade, and a lot of emotions are involved when trading and facing profit and loss. After that comes the most important, money management and risk-reward management. Everybody who starts trading will make loss. There are many reasons to it. One is obviously the lack of knowledge. Another reason is the uncontrollable emotion. Another is not understanding the risk-reward and money management. This is the journey which every trader has to come across. And most of the people who start trading will leave halfway because it is not easy work. Only few can survive in trading as compared to long-term investing. In my case, I teach the subject related to stock market for nearly 12 years. What I have understood is having just a theoretical knowledge and practically investing and trading is a totally different thing. Because when we trade and invest, money psychology come. And many may not be able to control their emotions when they lose or earn money in the market. So I hope you have enjoyed this short trip. Today I thought of trying a little different video while on the road trip. If you want more such videos, feel free to comment /. I hope many of your doubts are cleared. Happy investing and trading. Thank you for watching this vlog till the end, and I will meet you in the next vlog. Thank you.